Hey guys.
Hey.
Welcome back to our mini-series on all things cryptocurrency for beginners. Last time we explored what exactly is cryptocurrency, and we also helped you understand why it is so popular. We also considered whether it is worth investing in cryptocurrency at all. So if you haven't watched that video, it is worth watching it before you continue to watch this one. So today, we want to explore how to invest in cryptocurrency for beginners. We're going to explore 5 ways to invest in cryptocurrency as an absolute beginner, and in particular, we'll also be exploring less risky ways of gaining exposure into crypto.
Before we dive in, it's important to be absolutely clear that cryptocurrency is a highly speculative form of investing, and you could lose all your money by investing in cryptocurrency. So it's just worth mentioning that. For some perspective, at the time of making this video, Bitcoin currently sits at $35,916 per Bitcoin. And 3 weeks ago, when we made our first video, Bitcoin was being priced at $57,477 US per Bitcoin. That's a 37.5% fall in price. That plunge was mainly due to Chinese regulators cracking down on the use of cryptocurrency. And in addition to that, Elon Musk reversing his previous decision to allow Bitcoin as a form of payment for Tesla cars, citing concerns about the environment as his key reason for making that decision. So all that to say, please be absolutely careful when it comes to this area of cryptocurrency. Do your own research. Don't just jump in because everybody is doing it. Make sure that you are comfortable with what you're investing and that you are prepared to lose it potentially, although obviously you might also make significant gains by investing in cryptocurrency. If you're really enjoying today's video, don't forget to hit the like button and subscribe to our channel to support us here at The Humble Penny. We'd also appreciate you sharing this video with one other person who thinks this whole area of cryptocurrency is complicated or confusing and things like that.
Okay, so the first way to invest in cryptocurrency is to invest in cryptocurrency via the crypto trading platforms. Okay, so the first of these platforms is Coinbase. Coinbase is a San Francisco-based company. It is one of the largest exchanges globally and the first to be listed on a stock exchange, Nasdaq. It is a fast and easy way to invest in cryptocurrency, and they also offer a digital wallet. It is ideal for absolute beginners to cryptocurrency and has one of the best reputations. It is also highly secure and offers low deposit limits. It is also regulated by the FCA. You could also buy popular cryptocurrencies such as Bitcoin, Ethereum, and other forms of cryptocurrency apart from Dogecoin. Look in the link above and below to check out Coinbase.
Okay, so the second platform is Binance, and this is the other really large crypto exchange or platform. They were initially based in China, but then moved out of China due to the increase in regulation by the Chinese government around cryptocurrency. Binance is really popular for its coin list, which is a list of alternative cryptocurrencies besides Bitcoin. For example, you can buy Dogecoin on Binance, but you can't buy it on Coinbase, which Mary mentioned earlier. They're also known for their cheaper fees overall.
Okay, so another way to buy and store cryptocurrency is via the app Ziglu. They are British-based and regulated and fully authorized by the FCA. They are also one of the first free companies with FCA registration as a crypto asset firm.
Okay, so the fourth platform to mention is eToro, which is an Israeli-based company. eToro is a unique crypto exchange and trading platform with social networking features. It has this copy trading feature which users can use to copy the positions of other traders.
The fifth platform to mention is Gemini, founded by the Winklevoss brothers, who became famous because of their connections with how Facebook was created. The Gemini platform allows you to buy, sell, and store cryptocurrency. Gemini is regulated by the New York State Department of Financial Services and was recently awarded an operational license by the FCA. Again, check it out in the links below for links to all these platforms mentioned in this video.
Okay, so beyond buying cryptocurrencies directly via the platforms we've mentioned, here are other ways to also get yourself exposed to cryptocurrencies potentially. So number 2 is to invest in stablecoins. This is a less risky way of investing in cryptocurrencies. According to CoinDesk, a stablecoin is defined as this. It's defined as a type of cryptocurrency whose value is tied to an outside asset, such as the US dollar or the gold, to stabilize the price. Experts see this area of stablecoins as continually developing and could potentially become the solutions for the issues around volatility and credibility of crypto assets. So here are examples of the most popular stablecoins. First one's DAI, spelled D-A-I, which is a stablecoin on the Ethereum blockchain. It was created in 2015 and is pegged to the US dollar as one coin for $1. The next stablecoin is one called Tether, or USDT. It's the oldest and most popular stablecoin and was created in 2014 and is also pegged to the US dollar as $1 for one coin. What's very interesting about this particular one is that it's one of the largest cryptocurrencies by market cap, and recently, as at the time of making this video, crossed $61 billion worth of market capitalization. The third stablecoin is called Diem, D-I-E-M, and it's currently in the works by Facebook. It was previously called Libra, and although it hasn't been launched, it has had the biggest psychological impact in this world of cryptocurrencies because of the power that Facebook have from a global perspective. In summary, stablecoins could offer some stability to portfolios. The risks are lower, but so are the returns as well.
So number 3 is to invest in companies associated with cryptocurrency. This could be a less risky way to gain access to cryptocurrency without the huge risk of holding it directly. So the first company to consider investing in is Coinbase. They are the largest cryptocurrency exchange and recently listed on Nasdaq. The next is Facebook. They are planning to launch a digital currency known as Diem. Next is Wells Fargo, who we understand are developing a US dollar-linked stablecoin. Next is JP Morgan, and they have a digital JPM coin, which is equal in value to the US dollar.
Number 4 is to invest via funds or investment trusts that have exposure to cryptocurrency. This is potentially a less risky way of gaining cryptocurrency exposure than buying the cryptocurrencies themselves. The first fund to mention is the Ruffer Investment Company, and they announced in December 2020 that they were going to allocate 2.5% of their portfolio to Bitcoin specifically. This one allocation alone made them about $750 million in profit in just 2 months of investing in Bitcoin. And they've since pulled their original investment in Bitcoin out while still leaving a lot of their profits invested in Bitcoin. The second fund to mention is the Invesco Elwood Global Blockchain ETF. This is an exchange-traded fund that tracks the Elwood Blockchain Global Equity Index. And to read what it says exactly, it says here that the index offers investors in this fund exposure to global companies that participate and have the potential to participate in the blockchain ecosystem. You can see this information yourself on the screen.
Okay, so the final way to invest in cryptocurrency is not quite for beginners, but it is worth mentioning from an educational perspective. So number 5 is Bitcoin options. Now, before we talk about Bitcoin options, it is important to understand what options are. So according to Investopedia, options are financial derivatives that give buyers the right, but not the obligation, to buy or sell an underlying asset at an agreed price and date. That agreed upon price is what is known as the strike price. So with that definition in mind, instead of buying Bitcoin cryptocurrency outright, you'd instead buy Bitcoin options.
So Bitcoin options allow you to speculate, and that's the key word there, speculate on whether you think the price of Bitcoin is going to go up or down in the very near future. You'd buy what's known as a call option if you believe, for example, that the price of Bitcoin might increase in the future. To buy this call option, you'd pay what's known as a premium fee per contract. So let's look at 2 scenarios. Let's say scenario 1, you've correctly predicted the price of Bitcoin going up. And let's say that the price of Bitcoin does go up far above that strike price that you had agreed to. You then have the option to exercise that call option and essentially buy Bitcoin at the strike price and therefore make your profits for everything above that specific price point. If If, on the other hand, the price of Bitcoin does not exceed that strike price, you'll essentially just let the option lapse, and all you would pay would be that premium fee before taking out the options trade. So you can see that gives us a clue as to other things that are potentially influencing the price of Bitcoin. It's worth noting that at the time of making this video, around $2.2 billion of options contracts expired. These are essentially options contracts that were not exercised by people who were speculating on the price of Bitcoin. And before that, a few months ago in March, around $6.6 billion of options contracts also expired.
So why does all this matter? Well, experts say that these Bitcoin options will dictate the price trends of Bitcoin for months to come.
That's really interesting, isn't it? Because that tells us a lot around really what's driving the price of Bitcoin. You know, it's not just a random price going up and price going down. There are other factors by people who are potentially a lot more savvy at this game, controlling the price of Bitcoin. A key takeaway from today's video is that although it's becoming a lot easier to invest in cryptocurrencies, and although there are different ways, as we've explained on today's video, by which you can invest in cryptocurrency, this area of alternative investing remains very complicated. We'd highly suggest not just jumping into cryptocurrencies and investing because of the fear of missing out. What we would say is focus on educating yourself, which is what we are doing ourselves, before you try to invest in cryptocurrency, if at all you are going to invest in cryptocurrencies.
Guys, would love to hear from you in the comments. What percentage of your portfolio do you have invested in cryptocurrencies? Thank you for watching today's video.
Thank you, guys.
Don't forget to share it with another person who finds cryptocurrency a bit complicated or confusing.
If you missed our first video in this mini-series where we answered the question, what is cryptocurrency exactly for beginners? Check it out to the left and make sure that you watch that video as well.
Also, don't forget to subscribe and support our channel. Thanks so much for watching, guys. And as ever, in all things, be thankful and seek joy. Take care, guys.
Take care, guys. Bye.
Bye.